The American dream is being quietly repossessed, and most people are too distracted to notice the repo man is already at the door. While the mainstream media obsesses over daily political theater, a fuse has been lit under a $36 trillion debt bomb that is now past the point of no return. We are no longer talking about a potential crisis. We are talking about a mathematical certainty. But in the shadows of this impending collapse, the world's most powerful elite are not panicking. They are preparing. A legendary figure on Wall Street, a man who has spent decades predicting the biggest shifts in global markets, has just issued a forecast that has sent shockwaves through the financial capital of the world. He isn't just predicting a rally, he is predicting a total valuation reset. He believes gold is headed to $10,000 per ounce. If you think that sounds impossible, you haven't been paying attention to the cracks forming in the foundation of the global monetary system. Today, we go behind the curtain to reveal the Warsh Shock, the secret accumulation by central banks, and the terrifying reason why this current dip in prices is being called the last stop before the greatest wealth transfer in human history. If you hold dollars, stocks, or real estate, the next 10 minutes could determine whether you end up on the right or wrong side of this decade's financial extinction event. To understand where we are going, we have to look at the man who just moved the goalposts. Ed Yardeni, the president of Yardeni Research and a veteran market strategist, is not a doom and gloom permabear. He is a Wall Street institutionalist. When a man of his caliber says gold is going to $10,000, the smart money stops talking and starts listening. Yardeni's roadmap is chillingly precise: $5,000 by the end of 2026 and $10,000 by the end of the decade. But why now? Why, after years of gold being mocked as a pet rock, are the titans of finance suddenly screaming from the rooftops? It starts with something the insiders call the Warsh Shock. Recently, the gold market experienced a sudden, violent sell-off. Prices that were comfortably sitting above $5,500 plummeted in a matter of days. The catalyst? The nomination of Kevin Warsh for a top Federal Reserve post. The market views Warsh as a hawk, a man who will keep interest rates high and protect the dollar at all costs. The headlines screamed that the gold bull market was over, but they were wrong. What we witnessed wasn't a crash, it was a cleansing. It was a massive margin call that wiped out the weak hands, the leveraged traders who were playing with borrowed money. While the retail public was panic selling, the institutional giants were laughing. They used the Warsh Shock to shake you out of your position so they could buy your gold at a discount. Because they know what Kevin Warsh knows and what the Federal Reserve is terrified to admit. Interest rates don't matter anymore when you are $36 trillion in the hole. The United States is currently adding $1 trillion to its national debt every 100 days. We are now spending more on interest payments than we are on our entire national defense budget. This is the debt spiral. When a country enters this stage, there are only two ways out: total default or massive currency devaluation. Since the U.S. government will never choose to default and lose its power, it will choose the second option, printing the dollar into oblivion. This is why Ed Yardeni is predicting a commodity melt-up. In a melt-up, prices don't rise because the asset is getting better. They rise because the currency used to buy them is dying. If the dollar loses 50% of its purchasing power, gold doesn't just go up. It simply adjusts to reflect the reality of a devalued currency. $10,000 isn't a high price for gold. It is a low price for the dollar. But the U.S. government isn't the only player on the board. While Americans are being told that inflation is under control, the rest of the world is voting with its feet. Central banks across the globe, led by China, Russia, India, and the Middle East, are dumping U.S. Treasuries at a record pace. For 70 years, the U.S. dollar was the world's undisputed reserve currency. That era is ending. These nations are participating in a global monetary reset. They are swapping paper promises for hard assets. They aren't buying gold because they want to make a quick trade. They are buying gold because they are preparing for a world where the dollar is no longer the king. When the BRICS nations eventually launch a gold-backed settlement system, the demand for physical bullion will exceed the available supply by a factor of hundreds. This is the supply-demand squeeze that will propel prices past $5,000 and toward that $10,000 target. And we cannot talk about gold without addressing its high-octane sibling, silver. If gold hits $10,000, where does that leave silver? Historically, in a precious metals bull market, silver acts like a coiled spring. It often stays stagnant while gold leads, only to explode with triple the intensity once the momentum shifts. If the gold-to-silver ratio returns to its historical average during a $10,000 gold environment, we aren't just looking at triple-digit silver, we are looking at a parabolic move that will create more millionaires than the tech boom of the 90s. Right now, we are in the eye of the storm. The volatility we see today is the last stop. The market is giving you one final chance to exit a failing fiat system and enter the safety of hard money before the door slams shut. Most people will wait. They will wait for the all-clear signal from the news. They will wait until gold is already at $7,000, and by then it will be too late. Ed Yardeni's prediction isn't just a number on a chart. It is a warning. It is a signal that the decade of the paper asset is over, and the decade of the hard asset has begun. The math doesn't lie. The debt cannot be paid. The currency cannot be saved. The only question left is, will you be holding the paper or will you be holding the gold? The legendary Jim Rickards has suggested that $10,000 might actually be a conservative estimate if the system truly fractures. We are approaching a point where price won't even matter, because there simply won't be any physical metal available to buy at any price. As we move toward 2026, keep your eyes on the debt and the central banks. Ignore the daily noise of the Federal Reserve and the Warsh Shocks. These are distractions designed to keep you from seeing the big picture. The big picture is that the global economy is being re-indexed to gold. The fuse is burning. The countdown has begun. $10,000 is the destination, and we are already on our way. The only thing standing between you and the greatest wealth transfer in history is the courage to see the truth before everyone else does. What is your move? Are you betting on the politicians and the printers, or are you betting on the only asset that has never failed in 5,000 years? The clock is ticking.